What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a technical analysis on Sundays to go over the charts as we get prepared for the week ahead. And also, if you would like to, you can follow me at Hemi137, as I do provide a daily pulse on the market to give you my insights and what I'm looking at for the day. So, with that being said, before we get started, remember to drop a like and let's go ahead and get this thing kicked off. Now, something I want to preface this, and this is something I say during every earnings cycle. Earnings cycles are very, very important as they give you a lot of insights into what's actually going on, as opposed to this narrative that's essentially directing the overall masses to whatever directive or whatever they're trying to push to the general public. So that being said, there is some great insights. We've gotten a taste thus far of what things are looking like. And then also understand that this week and next week are going to be some very, very big weeks, as we've already gotten some really crazy things going on. This is something I've talked about. When there's conflict going on U.S. soil, it will affect the market. Right now, with all the things that are currently going on, this all got kicked off. You have to remember there was an assassination attempt on Trump last weekend. Now, over this past week, you have essentially the Democratic Party turning against Biden. They want to get rid of Biden and essentially put Harris in there. That there's a potential that Harris could come in, and essentially, I guess there's some sort of rule that they may not even potentially be an election if Harris does take over because of Biden's mental health. We'll see if that is true or not. Nonetheless, I'm not here to debate that. What I'm trying to hear is to provide you an overall sentiment of how that affects the market. It is putting a very, very uncertain time in our economy, and understand that that will drive new fear in the market to crash the market. Now, you have to understand, because of the debt-based system, this is normal. The cycle is normal. We are supposed to sell off about every 10 years to reset the cycle because of inflation and the way the debt-based system works. Ultimately, understand that as of right now, with the new fear that is in the market, it will start driving us down. They need a narrative. They need a essentially quote unquote fall guy to be able to take the grunt of what's about ready to happen. They've removed the debt ceiling to ultimately try to drag this thing out for a year and a half while institutions have been waiting to invest. But because they've dragged it out for over a year and a half, and that's very well relevant since they pulled essentially the debt ceiling off, and now they've just been spending like crazy. And the Fed has called this out. This isn't sustainable. This is not something that we can do. But ultimately, they need a fall guy. Now they can blame it on one, either Biden's mental health, or two, they can blame it on Trump. They already have analysis coming out saying that if Trump is elected, that he will drive this economy into the ground. Again, they are planting seeds. This is what they always do. So this is what you have to keep in mind. The market is already built to crash. So understand that. It doesn't have to do with any president that's in there as of right now. Because of the debt-based system, they've been delaying this to happen until they can set up their cards in the way they want. So they can control it to an extent, but they don't have ultimate control. They still have to, again, steer the narrative to be able to do that. Being said, so we've had all that going on with Trump, going on with Biden. So you have that fear of what's going on with there, and what if President Trump was actually assassinated, what that kind of conflict could lead to. And understand that any kind of threat or fear on U.S. soil will scare the market, and the market will crash because of that. So you need to be aware of that. And even if it does crash because of that, they will blame it on that, and not the fact that the debt-based system is not a good system. And history and essentially history has proven that it's not built to last. And so, with that being said, let's start pulling into what's gone over the last week. Now, over the last week, what we've also seen is there was a huge outage because of CloudStrike. They said it was a null pointer. If you have anything to do with programming, you know that that can lead to some major problems. But nonetheless, it essentially took out banks. It took out not only banks but airlines. It took out essentially everything because of that. What was going on? I guess CloudStrike and Microsoft. It was an issue. It was an update that Microsoft had pushed out, and I guess CloudStrike didn't really like that, and so essentially kind of shut everything down. At least that's what the context of which I had gathered from what was currently going on. I don't know all the details on that, and again, there's no point really getting into a lot of the details. Point is, it went down, driving more fear in the market, and this is what I talk about: momentum. So not only did you get the assassination attempt, you got all this confusion floating around with Biden. Now you have the CloudStrike thing. What other different bad scenarios are going to happen to continue to draw this fear? Because the market has been on a down cycle. And typically, this is normally a bull cycle when you start getting into earnings. And we're not really seeing that. Since the beginning of earnings, we've seen the market start to decline. And that's not good because you haven't even gotten to the meat and potatoes, which starts this week and next week, of essentially earnings. And we are not expecting good numbers. But again, ultimately understand this is why expectations are so low, because all you have to do is show up to essentially get a participation award. And that's what they are trying to do. That's how they control the markets from crashing, and understand that if it gets too carried away, they just shut down the market, right? They try to steer that narrative. So these are things you have to keep in mind when the market is essentially, when it starts getting really volatile. There's not a lot of volume. There's a lot of uncertainty. But nonetheless, U.S. corporate bond credit spreads have spiked to the wildest level since 2001. Again, you are seeing a lot of data reflecting worse scenarios than that of 2008 on essentially you can look at corporate essentially debt and essentially all their books, they're underwater because none of their assets have been brought to market. So you're not really actually seeing the massive amount of debt a lot of these banks are holding. You have to see the actions that are taking place. A lot of these banks have closed down tons of branches. This is a sign of recession. A lot of huge corporations have done stock splits. Again, huge point to essentially recession. A lot of CEOs have sold massive amounts of stock over the past year because of the same scenario, the face of recession, and ultimately understand what we're starting to see is stocks, bonds, gold, and oil are all selling off. That should be oil, gold here. So gold, bonds, and oil are all selling off. That is just pure fear. Now, that's something I talked about with gold all the time. Gold will run up before you go into any major event. But then again, when you start getting massive amount of panic that we've gotten over the past week, it doesn't matter what it is. It's sheer chaos. When it's sheer chaos, everything will sell. And so that is what the rumor and the worries are concerns. You're starting to build a lot of momentum towards the side of fear. And now the rumor that Biden might drop as soon as this weekend. I'm hearing that tomorrow. I'm recording this on a Saturday evening. I'm hearing that on tomorrow, Sunday, he might actually announce his essentially departure from running, and that essentially he will back Harris. So we'll see how true that is. But it could be very, very interesting to see how that plays out. So with that being said, let's get into some earnings. As far as earnings are concerned, ASML came out. Forward guidance looked bad. It started bringing down chips. And when chips start going down, that is a very bad sign because, again, we've been led by NVIDIA. And NVIDIA has been one of the biggest ones that have essentially guided that down. And then also TSM, forward guidance. They're doing great. They're beating expectations. But again, ultimately understand forward guidance is what matters right now. People are concerned about what's going to happen in the next couple of months. With that being said, we've also had Netflix. I said the biggest thing to watch when you watch Netflix is subscriber count. Their subscriber count has grown significantly. They've got 8 million new subscribers. So essentially, they have doubled their subscriber count. It's something I've talked about. Because of the environment, people go for cheap entertainment. They can't go out to eat fast food because it's expensive. They can't go out to do any of these major events because of the fact that it's expensive. And understand that Netflix again, you'll have a higher count because of that. And you'll notice that once the economy itself starts recovering in real time, what will happen is that subscriber count will drop. And this is why they've also talked about removing the subscriber count because of that fact. And then also this past week, we've also had Domino's, and Domino's, again, you want to say inflation is done. It is not, right? Because of the cost of food, a lot of these essentially fast food industry has been hit extremely, extremely bad, and they are starting to decline. So with that being said, what you're seeing is Domino's took a massive 12.8% drop here over the past weekend. Over the past week, we're going to see that continuation all throughout the next couple of weeks. You have to understand it's going to get bad, and it's definitely not going to be easy scenario. And just keep that in mind that you're going to see McDonald's, Starbucks again to continue to decline in this current environment. Again, the rates have not changed yet. Until the rates change, which what we're seeing, again, there's a high probability that it's going to happen in September, is what they're saying, right before the election. We'll see how true that is. You have to show me. This is more of a show me before I'm just going to assume. The market moves off of assumptions because of these projections, but ultimately understand what the true scenario is going to be is you have to wait for it to actually happen. The Fed don't know when they're going to cut. They don't know. They can guesstimate, but again, they are waiting for a bigger event to occur. And again, you're planting tons of seeds to crash the market to make it look like it's not the debt-based system. And you have to always understand the underlying problem is it's a debt-based system. It's not based off of the president. It's not based off all these other things, but you can draw fear to the market to where it will crash the market. And then you can blame it on that. And then you can just start spilling all the information. This is why I say you get a ton of information. You get overwhelmed with information. So that they can, release what the actual true problem was, but they'll tie it to something else and blame it on that. And that's what they're trying to do. They're trying to plant the seeds because they know this thing is getting ready to buckle. And you're in the market long enough, you see the manipulation happen all the time. It is a norm when you get into watching markets and reading the news and actually see what's going on, reading these reports and seeing the overall aspect of these earnings has been really, really bad. And again, this is why I say there's certain earnings you need to pay attention to and watch for specific things, because they're going to tell you what the true understanding of what the true market's going on. And understand, again, this utopic view will eventually get ruined, but ultimately understand that, again, some things will play out, some things will not. Well, we've seen, again, that they were able to hold up the market for the past year because they got rid of the debt ceiling. So they will do whatever they can in their power to steer the narrative, and that is very much what they do. So as far as upcoming earnings or upcoming events during the week, again, during big earnings, they try not to draw too many scheduled events if they can. If they know something's about ready to happen, they try to delay it outside of the front end of earnings. Understand that earnings are typically front loaded. So again, they will have all the industry leaders. They will try to avoid giving too much big data during that time. They try to squeeze that out if possible. So do understand that we do have GDP numbers that come out on Thursday at 8:30. Again, that's going to mean a lot because of the fact of these cuts, and understand that our GDP is actually a lot lower than what's being reported. Understand it's being propped up because of all the money that we're giving to Ukraine, all these government jobs that we're creating from taxpayer money, right? All the spending that we shouldn't be doing, but they're doing it to prop up these numbers to show we're historically low unemployment, that we have a historically high employment, right? And understand that all these phenomenal things. Well, and if that's the case, then where are we in one of the periods in history in which people are working two full-time jobs? One of the highest points in history that we are doing that. I believe it might even be the highest time in all of history that people have been working two full-time jobs. And understand that the definition of these things keep getting changed because they're trying to hide the narrative of what's actually going on. So we have that. We have core PCE on Friday. Again, I don't think that's a big mover, but again, it'll give you insight into the next core. So those are the kinds of things you have to watch there. Again, the Fed are watching that, so we'll see there. Next monetary policy is until July 31st. Not expecting anything for that one. What we're expecting is the September one. We'll see again. I don't think it's not going to be scheduled. If it's only a 25-point basis move, it's not going to do anything. But what they're looking for, if they do cut in September, it would be a political move. And then ultimately understand they want to really see if they cut just by 25. Again, it's going to take a couple months to really see how that plays out. But ultimately understand what they want to do is see what inflation looks like when they cut. They don't want to cut too fast because you're not trying to essentially rush demand back in, and they still need housing prices to come down. So if they can avoid it, they will not cut. So just keep that in mind until things get really, really bad, and understand by the time they realize that it's going to be too bad for them to just turn on the money printer and expect things to come back and bounce back fast. It will be a hard landing. Again, you are dealing with a very, very big data set, so you haven't seen in decades. And to think that this thing is just going to soft land, it will not. But again, ultimately understand they are trying to offload this to whoever the president will be in February. Again, if they can't, they will blame it on mental health of Biden or whatever the case is. Or this is why the Democrats aren't putting in a new candidate, because they know what's about ready to happen. So what they're going to do is blame it on Biden, blame it on Harris, or blame it on Trump, on whatever's about ready to happen between now and March of next year. So with being said, next core is August 14th. Upcoming earnings. We're going to look over the calendar here thanks to Earnings Whisper and take a look at what we want to see. Again, big week. The next 2 weeks, SPX is up to 84. Which is really high. Typically, you're looking around 60. So the fact they're pricing in 84 points is huge. We've seen some big drops of the past couple of days, just because that new fear is coming back. And then you have Tesla reporting earnings this week, so it's really, really high at 23. You got Boeing, which is sitting pretty high, roughly around 7, which kind of typically sits at, and then JP Morgan is sitting at 5, which is a little high. It floats. It typically sits at like 4. So if it goes like up a point to 5, that's pretty high. Again, we saw it up to, I believe, 7 when it reported earnings the other week. So with that being said, let's go ahead and jump into earnings, as we're starting to get in some really big earnings here. As you can see, there's going to be specific ones that I want to look at and kind of break down and look at specific highlights that will give us insight into the pulse of the market. And this is something that media is not going to tell you. This is something that nobody's really going to tell you, but you need to pay attention to these things because it's giving you the true state of the economy. And actually understand the narrative that I talk about. All this is essentially being reinforced by a lot of things that I particularly look at that feeds that narrative that I have. I think you should always have a narrative or a thesis on what you believe is actually going on, and then kind of steering that ship and aligning events with your your stocks or whatever your case is in events that are currently going on. You'll find that you have certain price targets. If you're an intraday trader, it may not matter that much, but if you're swing trading or anything like that, you need to know what particular things are going on. I mean, even intraday trades, it's good to know about events, especially with individual stocks. That helps a lot. If you can catch an event before it actually occurs, option pricing for options can go insane if you can catch it, if you can get ahead of that curve. So events do matter. So this is why you need to be paying attention to events. So on Monday, the real thing we're really looking at here, again, banks are going to be a big thing. We're looking for bank news, especially when we start getting more into a lot of these regionals are going to be really important. So again, Monday, I'm not really looking at anything, just kind of watching headline news. Tuesday will be a big day this week. You got Spotify could have a huge day. UPS is going to be huge as it gives us a pulse of the market. Again, if people aren't sending out packages, they don't have excess cash. So you need to be paying attention to that. Then we have GM is going to be important because the automobile industry is getting absolutely hammered right now. They've got tons of metal on lots and they aren't moving anything. So GM would be really important to watch there. And then another big one here, this again, Tesla is going to be big, obviously. On Tuesday, their cars aren't, they're still selling a massive amount of cars, but robotaxis and anything announced with robotaxis will be huge for Tesla. Again, that will be the new narrative, is robotaxis and humanoids. I've been talking about this for months. So just keep that in mind. So even if it starts pumping and people are wondering why, technical wise, ask you to check that video out as well, because it just broke out. Now they said there was a delay in robo taxis. We'll see what happens when Elon speaks. So that will be important on Tuesday. And then Google will be very important. AI sentiments, as of right now, we've been selling off going into earnings, so it's going to be really important what happens there. Visa will be extremely important. Capital One will be extremely important on debt and people paying back debt and what that looks like with these credit cards, because people are running out of, the banks don't want to lend credit anymore. So that's one thing that's really important to be watching, is what's going on with that, because now people are doing buy now, pay later, and they're becoming delinquent, right? It's about 40%, I believe, is delinquent, or essentially they can't get that money that essentially been loaned out. And so it doesn't run a hard credit checks. People don't have the data to what's actually going on with buy now, pay later, but that's what's saving a lot of people from the current environment and giving a lot of false information, because things are way worse than they actually are. Then on Wednesday, we don't really have too much in the morning that I'm really watching there, but we are watching Chipotle. Ford will be really important. IBM will be important for chips. Whirlpool will give you some really good insight, because Whirlpool is going to tell you about housing and where that sits at. And housing is getting bad. There's becoming more supply. You got some leaders when it comes to corrections, as you're seeing Austin, a lot of places in Texas are getting absolutely slammed. Colorado's getting slammed. Florida's getting slammed. People are losing all this massive amount of equity that's been pumped up over the past 2 years is starting to come down and correct. But Chipotle will be important because of fast food prices, and understand where they go at. And they're one of the highest fast foods out there right now. And they've been really price gouging with everything going on. So it'll be interesting to watch what happens there. Then Thursday, obviously you have American Airlines. We want to see where travel is at. There's been a lot of cuts going on with that. There's been a lot of problems with there. Southwest to be important. Abby Vi will give us more insight into healthcare, where that stands. I know Florida or California came out with this week about raising insurance premiums by like 50%. So it's getting crazy when it comes to in essentially any kind of insurance as of right now. So then you have Friday, Texas Roadhouse. Again, I'm not really looking at those too closely, but it'd be interesting to see what Texas Roadhouse has, see if they are declining, as far as a lot of industry leaders there. And then on Friday, you have 3M, which will be important to kind of see what happens with them. Nothing. The biggest ones that I see, the biggest weights are obviously Tesla, UPS, and then Visa. Again, I always like looking at Visa, any kind of other car industry right now. Tesla's even hurting, even though they're one of the best automobile makers out there. They're still hurting, and we've seen that. And so if Tesla's doing bad, you can expect Ford and GM to do really bad. So those are ones you definitely have to be watching. Any kind of cheap entertainment, Hasbro might be a good one to watch to see if how well they do with their cheap entertainment. Again, people are doing a lot more cheaper things right now to try to save money, because they're skipping meals. So that's one thing you have to keep in mind, is they're skipping meals. So with that being said, you'll see other forms of cheap entertainment that people are doing. So with that being said, again, it's been a very crazy past week. There's been a lot of information. Expect to be overloaded with information over the next 2 weeks. And then we'll have to dissect and see what happens. But again, the fear is growing. And if they continue to push more and more fear, this thing could collapse. And then ultimately they may have to start cutting, and they're going to blame it on whatever that narrative is. Whether it's, again, the president or president-elect, or whatever the case is, they'll find some new narrative to say that that's what caused the market to crash, because they are getting a lot of momentum to the downside. We've been nothing but up at this point. The market starts correcting or pricing in a recession when we start cutting massively. So just keep that in mind. Again, a lot of things propped up. Data is very misleading, because it's not the truth. So once you start seeing these earnings, a lot of these companies are hurting really, really bad right now. So, and a lot of loans are coming to maturity here, coming towards the back half of this year, and a lot next year. So if they continue to hold rates all the way till next year, that's going to cause some major, major issues. So we will continue to watch and see how this plays out. But it's not looking pretty, despite what's being essentially called out there. So if you made it this far, go ahead and drop a like. And until next time, I'll see you guys later.